Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. We can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
All right, guys. Friday. Options expiration. This is one of the largest options expirations we've ever had. Market has been very much pinned through the whole week with the treasuries even being able to maintain the range through pretty major news events here in the interest rate market. But when we come over and we look here, like, they are right on the edge there. Well, I would say they broke the range. I would say if the range is from here to here, we have definitely broke the range and sitting on the edge of, like, more crazy prices slash, you know, hitting towards August 22nd lows. So we're going to have to watch this carefully because there may be a tendency for the options to try and, you know, push us back into that range. Okay. But we may have already gone far enough that everything switches and we're now gamma negative and we start falling out and could get like some crazy trends. If we don't get them today, we'll almost certainly see some wild unhinged behavior on Monday. So be advised, this is our time, right? S&P 500 was able to eke something out yesterday and is a little bit higher. Oil did touch 90, although they are below 90 at the moment. Gold and silver actually recovering here, interestingly enough, as the treasury is pushed lower. And copper just kind of trudging along, having a bit of a spike, but coming back. When we come over and look at the currencies, well, here's Bitcoin. Bitcoin maintaining some of those small gains. We'll see if they maintain that through the weekend. And then we look at the dollar, you know, some crazy things happening in the dollar, but things coming back down to here. That big jump there, though, is the FX futures rolling over. Most of the FX futures rolled over today. So that's where we're at. We do have here in about 17 seconds the New York Fed manufacturing number, U.S. import prices. You can see the DOM already polling for that. So let's see what happens with that first and work from there, yeah? Okay. So the New York Fed manufacturing was 1.9 versus an expected negative 10. That's quite bullish. And would be negative treasuries. You can see the treasuries did sell there from about 16 to 13. Although I did see a pretty large iceberg and large order try to lift things at 14. So that means we wait. Because again, what I'm seeing, so, you know, we should talk about some of the other flows here too. So there was some more hawkishness coming out of the ECB. I think that there was a couple of sources that kind of suggested that the ECB, if they continue to see wage pressures, would hike in December as well. There was also Chinese data. The Chinese data was bullish. And then we had all of those numbers that we got yesterday that overall net were bullish slash hawkish. Even though the treasuries didn't really react to them in quite the way that you would normally expect. You know, they kind of came down and then ran across that range several times before settling the day towards the bottom, right? So what we have, I think, is a bunch of flows that suggest short, but this one flow that probably is stronger than all of that, the options gamma hedging, kind of suggesting that we should move back into range. So if I see flows to the downside, then, I would want to go along with those. But what I just saw there was possible signs of that hedging activity.
So we have posted out the US import and export price report for August on the feed for anyone interested.
So I'm kind of going to keep tabs on the flow here. We're also going to have to see if we get anything on the spread side. It does look at the moment that the 5-year is moving more. Let's come through here and Twitter, see if we got anything. By the way, good morning, everybody. Michael, Octavius, Saka, Keller. Hey, I haven't seen you in a few days. Boost strats.
We have also posted out the New York Fed manufacturing September reports on the feed for anybody interested.
Bitfinex, Tether fraud about to start inflating the crypto market again with more fraud, market manipulation, terrorist financing, human trafficking, and human rights violation and all that good stuff. You heard it here first. Does that mean that Bitfinex is telling you to buy?
And Canadian manufacturing sales reports also available.
Okay, what's Jimmy Oreo saying here about the UAW? In light of the recent developments with the UAW and the administration, it's probably a good time to revisit what happened the last time the administration weighed in on the matters of Detroit, as it was a very dark moment in our history. Oh boy, yeah. The year was 2009 and Chrysler was heading into bankruptcy. In the months that preceded, they begged and pleaded hedge funds to lend them money. Of course, the lenders required a sizable interest rate and, most importantly, needed the most senior and secured debt. Chrysler eagerly agreed. As the bankruptcy unfolded, the Obama administration stepped in and, ignoring 100 years of straightforward bankruptcy law, redistributed Chrysler's money to the unions. This was theft, plain and simple. Certainly, it's just a coincidence that the unions supported the administration and the hedge funds presumably did not. So, yeah, I think I can predict how this labor dispute will play out. Please feel free, or anyone, to tell me I'm wrong on. Oh, absolutely. Well, so if the assertion is that the administration is supportive of the UAW and will do whatever it can in its power to try and help the unions, that's probably true. But they can't necessarily force a company to accept contract, and I'm not convinced that what the UAW is asking for is actually reasonable. So this is going to be the battle of the next few years on the market front, I think. So I saw a TikTok the other day, and this guy was like, okay, what we need to do to fix this country, and his answer was like, get rid of stock buybacks and tax unrealized stock gains. And I don't know what his third point was, because like I stopped listening after that. But because I'm just like, oh, okay, so the solution to all of our problems is give the government more money. Why do you think that? Do you think they're going to give that money to you? Because I'm pretty sure that all that's going to do is just make Joe Biden and his son richer. I mean, that's how things have been playing out so far. But there is this thing, which is like how much money should go to the workers and how much money needs to go to investors and so on and so forth. And one of the things that I have seen is people in the C-suite pulling all sorts of shenanigans, especially with stock buybacks, to make the stock price go up and not actually help the long-term health of the company. It's like you're in there, the stock price goes up, you look really good, and then you get out before everything falls apart and you move on to the next company to destroy. And all they look at is they say, oh, hey, while he was CEO, stock prices went up. I guess we gotta get this guy. Right? This is how you get things like Unity Software. Holy crap, have you been following that one at all? How are they doing this morning? By the way? We should check that out. So Unity Software, they basically they provide this game engine that people can use to make games, and they're putting out a change to their licensing and so forth that basically makes it like nobody's going to use them anymore. That company is dead, frankly. If it made sense, I would short it to the ground, but it's already like pretty far down from its highs. So I just that company is dead. And how does that happen? You get these idiots in the C-suite that think that we can pull whatever we want and the market will take it, and all that matters is that we get our stock price up. But it looks like that's not going to work for them in this case. This is just going to destroy them. Well, I bet you. Because this guy that's in there, he used to be CEO at EA. I bet you he goes out and he gets another job at another big company. Right? So I can see a lot of capital being spent on executives and investors and being wasted, frankly, that would have been better spent on workers. Yeah. But at the same time, then I look at an instance like with the auto companies. I don't think that's what's going on over there. And I really don't see, like, you're trying to bring manufacturing back to the United States and so forth. I really don't see how the United States can be competitive if the cost of labor over here is that much, So this is going to be the real battle, is like, we don't feel like that the capital is being allocated well. How do we fix that? How do we make something that is not only fair but effective? I watched the Prime Agent, the dude from Netflix, has a podcast about Unity. It's pretty hard to fix any. What's your winning chance on a trade is about 50%. If we're doing things correctly, it's going to be about 50%. Unions suck. Well, I really do at heart believe that workers being able to organize themselves together in some form is a good thing. But I would generally agree with you that the way that unions have gone the last 50, 60 years has not been good for people. I remember so many stories when I was a missionary talking to people that were in the trades and so forth of the issues that they had with unions. And it was like, if the union was doing certain thing, you couldn't even work. You couldn't even make a living. And there's nothing you could do about it because they controlled that entire industry. And that doesn't sound right to me. There should be competition for labor, right? But I don't think that the competition should be between every individual worker, Or if it is going to be like that, we need to give some tools to empower individual workers to be able to push back against the demands that are being placed on them a little bit. So very curious that at 5% there's one order that wants to sit there in the 2-year. I am seeing some fairly strong flows long in the 5 years. So even though we're kind of at the lows and it's making me think maybe I want to go, I'm gonna sit on it and keep yapping. Because again, I see the possibility of things becoming unhinged, but the most likely scenario is that they push back against that and the options kind of pushes back towards mean reversion. You know, on the Unity thing, I've never used Unity myself, but I've followed that space really closely because, you know, I've always been a big fan of Epic Games. To be honest, I have such conflicted feelings about it because really I'm quite upset and bitter about how things have gone with Epic. I'm quite bitter about how things have gone with Epic, but I still love them. I still love them. I love it. I hate Fortnite. I can't do it, man. So here's what happened. I was one of the... We ran a website called beyondunreal.com, which was the leading website for Unreal Tournament and all that sort of stuff, and all things Unreal Engine. And they were making a new Unreal Tournament game with the community. So I got really involved with that. They took me out to Epic twice. I was, you know, making content every week for it. That was kind of how I got started as a content creator and whatnot. And then like the project kind of died down. My life changed, you know, like I got divorced. So I was spending that time that I was like making content, dating, and, you know, they moved on. And so there was this point. I remember the day when the Battle Royale came out and I tried it. And you know, I said to my friend that I'd been doing all the podcasts with and everything, Briz, I was like, well, it does look like they did a good job. Like you can tell it's the same guys that were making the Unreal Tournament because these are the guys that know what they're doing in terms of like the gameplay programming and all that. They did a good job. Maybe it just becomes this. And he was like, yeah, but I don't really enjoy playing it. And I was like, yeah, me neither. Now what Fortnite became is very, very different from like what we were playing anyways, because there's the whole thing about like you build stuff super crazy and you're constantly switching between building things and shooting and stuff like that. That would actually like totally be my sort of thing. But I just don't have the interest in it. And maybe it's just because of the way that things went. To sit down and like train that and get good at that. And so I'm just not into Fortnite, man. I couldn't get myself. So I had the opportunity to become like a big content creator in Fortnite. I could probably have made a living making content for Fortnite. I don't think that I would have become Ninja or anything like that, but I think I could have made a living making content with that game because we were doing pretty good with Unreal Tournament. But I just wasn't interested. And yeah, I'm a little bitter about it. Not because, well, I mean, things happened, but I was just like, I want to play my game, you know? I want to have a game again that I'm into and that like I'm building a community out of, you know? I guess my community became trading. I basically channeled all of that energy into trading. And I think that we've been more successful at trading than I ever could have been with Unreal Tournament. It's just Unreal Tournament would have been a bigger audiences, you know, so probably would have been more successful with that. But depending on the perspective that you look at it, right? But I want to have a game again, and they just have not made a game like that. Or they just have not made a game that I can get into since that time. And they make less games now, you know, like when you go and you look at Twitch. I know the games that are at the top of Twitch are pretty much the same that they were last year. People just don't release as many games these days, you know? Peter, I don't see enough movement. I don't know if you're talking about the games or if you were talking about in the equities. So did you see after I said that? Oh yeah, I'll watch this. Unity is doing what? The primary. Yeah, I'll watch that later. There's nothing original you can make anymore. Oh, yeah. Um, I think that there's lots of things that they can do in games. So maybe I'm dead wrong, but I still think that you could make a arcade shooter that would be big. In fact, I think that there is an opening in the space right now, because Overwatch sucks, man. Like Overwatch was basically the replacement. Like Overwatch was the game that I was playing instead of Unreal Tournament. I think that Overwatch kind of turned toxic, and so I stopped playing it. But that was the replacement for a while. And then Overwatch 2 came out, and the way that Blizzard killed it. Blizzard killed it. It's all their fault. So now that Overwatch is dead, I think there's room for you to come in with, and maybe you would need a little bit more. You would need additional innovation, but I think that you could come in and have another game, and I think that the space it's a team focused game that is much more arcade. There's a stronger focus on twitch skill, accuracy, and aiming. And instead of it being, you got to hit the guy as quickly as they come around the corner with your hit scan weapon, that you can dodge weapons, you can move around, and your ability to move around is a really big part of the game too, right? That's why I say it's arcade. That's the thing that Overwatch had that the other shooters don't have, that Unreal Tournament had that the other shooters don't have, right? So now that Overwatch is dead, there's room for somebody else to come in, but it just seems like nobody's interested. What do you think about Valorant? Well, Valorant is cool, but I'm not a Counter-Strike player. Right? That doesn't keep me interested. The other place where there's a hole in the market is basically PlanetSide is what I call it. PlanetSide is still going, but it's an old game. It kind of has some flaws that are so deeply ingrained into it now that they can't seem to overcome it. But the other side of this market would be like Battlefield, right? So it's a game where there are mixed arms. There's vehicles, infantry, air vehicles, and you're playing over a large area. Like it's a massive multiplayer shooter, right? So there is probably still a lot of innovation that can be done in making a really good massive multiplayer first-person shooter. So that's another place that you could probably go into right now and have some success. There's room. They don't make games like Room. Well, I think that people got tired of the old MMORPG thing. I think that people realized that they were grinding really boring stuff for no reason. So from my perspective, we're talking about games all day, huh? The thing that was cool about World of Warcraft is the massive multiplayer component. The getting together and a group of people and having a team and a culture and so forth in the game. That's what's really interesting about games, right? Is when you meet other people and you have to play as a team and you get to know those people. And I think that modern games have kind of moved away from that, right? You auto match with people, and it's different people every game, and the game almost seems to punish you for teaming up, which I think was like Overwatch. If it was me, because in Overwatch what they did is that if you're a group, you only get matched against other groups. And they adjust the MMRs and everything accordingly too, because otherwise people that group up would almost always destroy people that are on random. I think that was the wrong call. I think that the call should be, yeah, teaming up does help. So if you really want to play this game, you should team up with people. I think that you should encourage people to team up. That's just me. Because again, that's the cool thing. Like, that's the thing that people are that men are missing in society is like their tribe to go out and conquer things. People don't, most men don't have that in their lives anymore, and they want it. So you could probably make now the problem with that is that making a game like that is a huge undertaking. It's been a long time, so I think that there could be some technological innovations that help you out now if you wanted to do it. It would make it better than like when they made PlanetSide, but it's still a difficult problem. RuneScape taught me about economies and merging. I should get into what's the spreadsheets in space game. I'm always like, that sounds like my game, man, but probably better that I don't get into something like that right now. The other side of it is that I just don't play games right now because that free time I spend watching children so that my wife can do things, and they don't really get free time. So I was talking about this I was kind of alluding to it on TikTok. So like, if you're on TikTok, the big thing right now, and for a while TikTok would seem like there weren't trends, and they've shifted the algorithm back so that there are trends. So last week it was the Burning Man disaster, right? This week it is, how often do you think about the Roman Empire? So these women will go and ask their partners or their fathers or their sons, how often do you think about the Roman Empire? And the guys will be like, oh, I don't know, like probably a few times a week. Some of them are like 3 times a day. And the women will always be like super shocked, like, I never think about the Roman Empire. Why are all these guys thinking about the Roman Empire? You know what it means? If you don't think about the Roman Empire, it means you live a frivolous life. It really does. Okay? Because if you are, listen, I want to give you people a higher purpose. Your higher purpose here is to leave society better than you found it and to make life better for the people in the next generation. That's what this is about. This is why we're all kind of a little bit pissed at the boomers, because we feel like that the boomers just did what was good for them and aren't going to leave us with anything. I think in the end they will come around, and it's taking longer than it normally does because their lives are longer. But that's why people hate boomers, is because we feel like that they're not accomplishing that goal to leave society better than they found it. That's what you should be about. That's what life is about, folks. And one of the best tools you have to help you accomplish that is the history. And there's no better society to study the rise and fall of societies than the Roman Empire. So that's why I feel if you aren't thinking about the Roman Empire regularly, you live a frivolous life. That's my name, Octavius. There you go. Yeah. Doesn't surprise me that a lot of women don't think about it because, if you're a grown woman and you have kids and everything, then you're primarily going to be thinking about your household, right? And that's kind of my thing that I was saying is that, if the house is in order, and of course, I'm not making any kind of assertion about gender roles or anything like that. It's just the interaction between the two and how you are running the household. You're doing it effectively and things are in order and everything, and you feel good about that. Then you have the energy to think about things like the Roman Empire, which is basically like, how can I improve my society? But some people were saying like, oh, it's because men have this need to go out and conquer and things like that. Well, maybe to some extent, but I don't think it's that men have the need to conquer. It's that the men have the need to build societies. Yeah, conquering is sometimes part of that, though, yes. Don't plug my... I think that my older videos are better. I don't know, but like my more recent videos just don't excite people. But when I was, really going all out and trying to make silly jokes and things, like, people enjoyed it better. I felt better about it, but it just wasn't, like, the thing that pissed me off about it is that, like, I would have success, and then, so it's like, okay, keep doing that thing, and then you'd slowly have less and less success over time. So it was like TikTok just doesn't reward you. Well, it only rewards you enough to keep you posting. And part of why I got into TikTok was because I thought that it was maybe different, and it turns out that it's not. Good times make weak men, bad times make strong men. Something that I'm trying to teach my kids, and I don't know if they're getting it, because like, you say stuff and you just don't get any reaction, so you can't even tell if they're listening. And to my wife too. You get better at doing things by doing them. If you want to be smart, think a lot, right? A lot of celebrities are really stupid. Like honestly, goodness, a lot of like big name celebrities, especially actors, are so dumb. And why is that? It's because they became rich at a very young age. They came from money. They never had to struggle in their life. They never had to think in their life, and so they don't develop those parts of the brain. Everything that they develop is basically nepotism, right? But they don't develop problem solving and thinking and all of that because they don't have to think. If you want to get smart, you got to solve a lot of problems. And yeah, some adversity in your life helps. You want to be a great trader. I think the worst thing that can happen to you is to have a ton of success right at the very beginning. The trader that comes in and has a ton of success right at the very beginning, one of two things happens to them. Either they retire early and they just keep all of the money, or they eventually blow it all and they become a washed up guru that is doing everything they possibly can to try and hawk things around and get people to give them money. Like,
effective Fed fundraising.
Because what'll happen is you'll have the success, you believe it, and then you go in and you do that thing, and the market's not like that anymore, or maybe it was a fluke, and you'll never accept it. You'll never accept that the thing that made you the money was completely luck, that it had absolutely nothing to do with your trend lines and the system that you had built and all of that sort of stuff. They just refuse to believe it, right? And so if you think that you got it all figured out and you have nothing to learn, and then you don't keep working, you never become a great trader because you stop learning, essentially. Don't be so mysterious. Well, So, Strats, I was thinking about this because I keep getting this impression from you that you're looking for a setup. You know what I mean? So, like, you're looking for, if I took a snapshot of this thing right now at this exact moment, I'm seeing things in a certain way that tells me I should buy or sell.
1% in August,
right? And that's not what he's doing. What he's doing is, every time that it ticks, look at what the bid and the offer are on it, and look at how much actually trades. So right now there's about 1,400, 1,000 on the bid at 15, right? There's a good chance that on the next downtick that there's only like 400 or 500 contracts that actually trade. And then when it does tick down, you're only going to see a few hundred on the offer. Like you see on 15.5 right now, there's only 276. Okay, so it was 603. There's actually more there to trade than was on the bid. Okay. So that is the opposite of what we're looking for. What you want to see is like when it ticks up, it's less than the contracts that are on offered. The amount that gets offered when you tick up is low. And yeah, sometimes it will, it'll only be like 400 and then it'll stack to 1,000. But did you see that there was like 400 is stacked to 1,000 and then they pulled and now there's only 100 on bid. 500 is traded, which is an okay amount, but it's just like how much is actually trading at any one time for it to tick? Because what's going to happen is it's going to 200 contracts trade, it ticks down. 200 contracts trade, it ticks up. 200 contracts trade, it ticks down, and it just does that forever and ever and ever. And when you start to see that over time, or you see the shift where there's pretty decent liquidity, there's pretty decent amounts trading and hitting those, and then all of a sudden there, after a big order has gone through, now they put very, very little up. And I believe that's what he's looking for, is he's saying, okay, it's visited this price a few times, and I'm now seeing that there's not as much liquidity being placed there over the time. So it's not like any one moment, you're watching over a period of time, and you can see that the liquidity tends to be low, right? That's the liquidity hole. And now you have this spot to say, okay, there's probably going to be, if we move up, there's going to be more liquidity up here. And if we move down, there's going to be more liquidity over here. And that keeps it in this area. So then at that point, you just lean on these edges. So I can detect that I think that there is still a little bit of that going on here. However, I don't think that I want to take it long, because number one, I think that the overall flows could still be short. We're kind of at the range up here, so I don't want to go long, right? So this could maybe be an okay place to go short. But I think the easy trade that GWE has been making is probably already passed. So you see what I'm saying? So there are 6 forces, okay? There are buy and sell market orders, buy and sell limit orders, and buy and sell limit orders canceling. There are 6 forces, okay? And every time that it ticks, you're thinking about those 6 forces. What happened? How many market orders were there? How many limit orders were there? How many limit orders canceled? And what is the pace that is happening? And by watching those 6 flows, those each time that we tick, that's like a tea leaf. Tea leaf is like, it tells you a little bit about something, but it doesn't tell you everything about it. And maybe when you gather them all together in a huge pile, then maybe you have an idea of where things are going, right? So you're watching those 6 forces to try and get an idea of what things are doing. Now, at the moment, it actually looks to me like the bids are kind of firming up a little bit now. And there's a little imbalance to the long side on the market orders. Now, I would anticipate that these limit orders from 17.5 to 20 will not just get out of the way. That's why I'm a little bit scared to just come in and hit it long.
0.1% on the prior 1%, range of 0.
But at the moment, it looks like
4%.
the market orders are to the long side, and they're about to run into a bit of liquidity.
Forecast at 79.3%.
And we can see which side wins. Maybe we see the market orders sputter out and or flip around, and then that would give us an opportunity to reverse.
Prior at 0.5%, and the US industrial
Makes sense.
year over year saw a prior read of minus at 0.23%.
How do you know the current? I don't know. What I would do is make note of the clock down at the bottom of the screen. So at 7:06 my time is when I was talking about it. And then you can find it that way when you rewatch. Sitting around for too many hours can boost your dementia risk? Oh boy. Guess I need to not sit around so much. Oil coming down, by the way. So one thing I think I need to note here too, by the way, is that 17.5 is just where we were before the news. Like that's the open, but that's where we were before the news. So what we've seen is selling and covering and coming back to break even. So that us being at the highs, because when I'm seeing things at the high, I'm very often thinking, you know, that could kind of pull people in. But not in this situation, because it's not an overnight high or anything like that. It's just kind of retracing things. And so if anything, you might see a lot of liquidity here. Doesn't mean that they won't get through it, but I think on average we'll see more liquidity. So this I'm going to be watching at 18. How many trade? You know, like after it ticks up, what does that volume profile say? So 90 have traded there so far. There's 1992 on it. How many does it take to make it go bid? Okay, well, some pulled, 400 pulled, 1,000 pulled, 51 have traded into it, 1255. Okay, it went bid briefly. They sold it in, so there's about 1,000 contracts hit back. Okay, but okay, 1824. So okay. The orders that were on there, you did see that amount of orders on there. Okay. Now we're at 18.5. How many traded 18.5? You know, because if we had ticked through 18 on like hardly any orders, then I would start going like, why are the market makers pulling all their orders at that price when I expected them to hold? But it doesn't. They held. So what does that mean? That means we've got decent offer liquidity here. And we've got strong market orders coming in. How many market orders do we actually have? I don't know. That's why I'm a little bit worried about this is going to turn into a trend. But it could. It may really turn into like they take it all the way back to like 109, like all the way back to 110 is a possibility. Okay. Now, on the market orders side, we have seen an imbalance long, but it's only a small imbalance long, and the amount of activity that we're seeing in the market orders has slowed down a little bit. So that's not positive for continued trend. Doesn't mean that more market orders won't come in later. It's just a tea leaf, but that's just one little data point that we can look at that says, okay, they might not be able to get through this liquidity. Right? By the way, 4,871 is now traded at 18. Although it's on both sides. There was about 2,000 bought and about 2,000 sold.
So in 5 minutes time now at 9:15 a.m. Eastern time, we get the U.S. industrial.
Oh, yes, that's right. I forgot that we have University of Michigan inflation expectations.
0.5%. We also get the U.S. capacity.
Or 710.
The forecast is 79.3.
Well, we are getting a trend short in the S&P 500, so...
Outputs month over month. The forecast is 0.1% from the prior 0.5%. And the U.S.
And some shifts in the dollar.
For a prior read of minus 0.23%.
So maybe we should wait and see what the dollar gets to here before I make too many conclusions about what things might do. Okay, so there's 19. So did you see there at 18.5 it only took 13.45 and 13.11 at 09 at 19? So now you are seeing those limit orders pull out in front of it. So that's maybe is an opportunity for us to go long, right? Okay, more orders aren't coming, so they tick down. 1,000. But they're hitting it. ZB looks like it might have more to give here. Wow, you got 10 points, Peter? In ES? One short ES? Yeah, that sounds like if you had gotten in like the beginning of the stream and it just held it this time. That would be a good one. Seeing a spike in gold here. I know we're seeing it across the whole interest rate complex, but it seems like gold is going up a lot stronger than the treasuries are. So I'm going to not take another contract there because I'm a little bit unhappy about the market orders at this time. I wonder if the equity indexes just sell solely on the UAW news, on the news with strikes at the big auto companies. They would have gotten filled there. I don't know if I actually want to fill at 1906. Okay. A little bit of light liquidity at 18 and 17.5, which I find a little curious.
I'll be leading with the US industrial production month over month.
Okay, we're about to get the US industrial production numbers. That's usually not a huge number. You can see that they're not like pulling for it, but we may see something from it. Do you have a trading bot? I'm not actively trading any trading bots right now.
Ten seconds.
Okay, now they are pulling for it. So that's not good. I would maybe normally would puke, but let's YOLO it.
Still waiting.
Well, I've programmed lots of things, and all of these indicators are helping me trading, but I don't use the bots.
Utilization 79.7%, 79.7%, higher than forecast 79.3%. Factory output month over month at 0.1%.
U.S. export prices month over month 1.3 versus spot 4, and industrial production spot 4 versus spot 1. So that is also a little hawkish, and there is a little bit of selling there.
Still waiting on the year-on-year industrial production.
Yeah, so on the bots, you know, I kind of came to a spot where I was like, okay, I think the next thing that I want to do with the robot is this. But it was a little bit too sophisticated for the time and resources that I have at the moment. So I'm going to build a new machine in the winter,
Industrial production.
and then with the new machine I might do a little bit more on that. Because basically, like, the computing power that I needed was more than my machine couldn't handle doing that and the stream at the same time, basically. So that's why I kind of haven't taken it any further. But I want to utilize some machine learning models on order flow, and I want to try and utilize a large language model that like listens to the stream and maybe says stuff to us from listening to the stream. You say long 18.5? It's definitely doing it right there. 438 to trade it down. Only 200 on offer. It's just the market orders aren't really coming through. Okay, only 173, and then that's only bid. 98, yeah, it's definitely doing it there. Although they tick down. Oi, oi. It kind of looks to me like there's a hole here, but it's all the way. It's all the way. It's from here to here. We did see the dollar really move there, right? So I'm really wondering if I go over to the currencies and I do some TA on the currencies, that I can find some spots where they're likely to reverse and can kind of time trades in the treasuries accordingly. I keep looking for research. So if you guys are going out and like browsing archive.org or whatever, that's maybe a spot to try and look is stylized behavior of currencies in particular. If you got anything, send me links to studies. Nope. That is not working, so I'm going to puke that. I think that kind of what happened was I took a trade, not realizing that this news was going to be here. So I'm sorry, Jiwi. Yeah, I think we both made the same mistake, right? Like, that was like too soon around that news to be doing something, and now we've got like the equity indexes starting. So we got some selling because of that news. There's definitely like selling in the 30. Now the 10s is still pretty balanced. That's kind of been the story, is like, you see the flow in the 5 and the 10, but the 10 is balanced. Sorry, the 5 and the 30, but the 10 is balanced. Because I think that there's also this possibility where, like, you know, they try to push back into the range and fail. You've always sucked on Friday for some. Me too. Dude, Fridays are always the worst. Regardless of whether it's non-farms or just standard trade. I think another thing that we have to consider is, like, if I'm trying to make one tick, you know, and it's taking about 2,000 contracts for it to tick up or down, how much time is it taking to get 1,000 market orders, right? Like, if I'm getting 2,000 market orders every minute, then it's fine. But kind of what happened to us there was, or would definitely what happened to me was, like, as soon as I got in, the market orders dried up. You know? then nothing happened until the news, and then it was sell after the news. That said, that bid at 17.5 is looking okay. Nope, pulled all the way back to 6. This area is getting interesting enough to me that I'm kind of thinking about pulling out my account, but not seeing enough yet. I also, I don't think that oil dropping the way that it is this morning really helps either. Why is oil dropping so hard? That I find a little curious. Apple tells support staff to remain silent on iPhone radiation concern, huh? Oil is love, oil is life. Well, do you know why they're selling it today, Kulu? Is it just they have a tendency to do that on Fridays? Is it there's counter news that I'm not aware of? Is it they just doing what oil does? I don't know. Found a story on Zero Hedge that catches my interest. According to Goldman's Vanny Rangath, the next blackout window begins at the end of this week, Friday, September 15th. That's when roughly 50% of the companies in the S&P 500 are estimated to be in a closed window. Goldman estimates blackout begins 4 to 6 weeks ahead of a company's earnings release, so we will likely start to see a decline in activity this week. As a reminder, the Goldman buyback desk sees a 30 to 35% decline in volume during blackout. Okay, so they're telling you something about a flow, like that you're going to have 30 to 35% less market orders in that particular flow that's bearish. The surge in yields has made debt-funded buybacks increasingly prohibitive, and the drop in executions is hardly a surprise. While companies are buying back less of their own stock, they are busy selling. Finally, there's another reason why tomorrow markets may be bumpy. As reported earlier, Friday will be the largest September options expiration on record. Goldman estimates that 3.4 trillion of notional options will expire, including 555 billion of notional single stocks. That means that the rock-solid gamma gravity, quote unquote, at 4,500 is where the largest amount of strikes is about to fall away, and the market will swing wildly in the coming days. Yes, but I think if I was in ES, I would be trading it towards 4,500, right? And the market seems to be taking a little bit more of a decline here in the last 2 minutes as we start to head into the S&P 500 market open. F this, I'm going sim now. Yeah. Well, that's why I did it on sim, because I felt like it was a little dangerous. I think that I was a mistake. Not only that, but like, I often like to take a trade on sim, have some success, feel like I know what's going on before I start pulling out the live account. And that time it didn't go well, right? I'm kind of thinking about that right there. There's a big order at 19. It's following down at 18.5. I don't like that. You're never trading the 10-year again. Look at E-mini go. Oh, Kaluta is answering the question. I don't know, Seth. I don't watch news. All right, well. When I look at how much volume is traded here beyond this point, like 89, 64, 53, it's not that much. So there was a little bit of something there in the micros. Did you see that? Oh, interesting. Should at least know when there's news. I don't need to do that. I can. Well, yeah. But then you're like, oh no, what do I do? And you have to like bail out of the position at a loss, and you don't want to do that. Yeah, you should know what the news is coming. So that you can sort your positions out long before. There's something weird going on here, though. Well, so there appears to be a degree of liquidity hole at like 18, 17 half. But I saw some odd volume in the micro. Just as I was thinking about messing with it. Because I did put an order out there and put in a position, but it was really more like me trying to test the waters. It doesn't seem to be going very well at the moment either, does it? Okay, here's a yes. Looks like the first impulse is a buy. Are they going to buy back that big decline that we saw going into it? Mm, 18 looks decent. There's still low liquidity at 17 half though. What's with that? Okay, the first impulse in the E-mini was long, but they didn't get very far, so... And oil is falling even further. The dollar is just ranging here. I'm not seeing the yields change too much. Maybe a little bit of flattening in the knob. In the knob. Yes, for me, oh, it's totally the I agree. ES is an advanced instrument, man. Like, it's kind of crazy that most retail traders go immediately into ES because it's like probably the hardest one to trade. Or NASDAQ. NASDAQ is like, it's the hardest to trade, and there's like huge risk on it too. Because it's so illiquid. So slippery. Okay. Okay. So do you see now that they're back to 314, there's a few orders and the micros going off again? I don't know if that tells us anything. I just find it really unusual and odd. It does look like there's maybe a little bit of bid liquidity here, though, supporting things from dropping below 17. Like that, you know, that 2000 there at 17 was pretty solid. What was that about? It's interesting, the micros went before the treasuries did.
Oil futures extend losses with Brent up. Brent's up by $1 a barrel now, so again, just pairing some of those losses.
Is the losses in oil that big of a deal? I don't know. I feel like it's a pretty big drop. Well, it's 1.19%. I'd say that's less than the gains that we've had recently, but still. Okay, the Treasury's had a little bit of a slump there. So it looks like they're kind of backfilling here a little bit. It is curious because it's moving around. I'm not seeing an imbalance in the market orders per se yet. There was a little bit of a sell, like the last bar, but it's not like a trend yet or anything. That's great. I have a big short in oil. Really? Well. Okay. How are they going to react to 16 now? Always got interesting things happening at 16. Think the E-mini has the potential to go lower? I mean, it still looks to me like they're trying to buy it, but they don't appear to be having too much success, do they? It's usually easier to clear 16 than that. What's the nuke? Oh, well, so the column on the left, that's my profit and loss. Like, can you see here on the ZN, I had taken something at 18.5 that is like a terrible position. So I should deal with that, get out of that. somebody sold 800 there, and 600 of it went into 16.5, and 200 went into 16. Again, there's often a lot of, because 16 is kind of an even number, it's half of a handle. So you often see decent liquidity and trade at 16, and so far they're not really seem that interested in touching it. It looks like market makers are taking themselves out at break even. That could be. Like, it could be that some people were long and kind of taking their, you know, trying to break even here. Because, I don't know, like, we came down here in the treasuries, but I'm not really seeing any of the correlated assets move. And I just find it really curious that they're not trading 16 yet. Maybe it just takes them some time, but... Okay, so did you see that at 16.5? O-strats? And did you see that? Like, back and forth with only 50 contracts? That's definite signs of a hole. And you're starting to maybe see 16 do it too. Like, the orders at 16 pulled, right? So this one is a little odd because I don't necessarily see a specific reason for why the market makers might be doing that. But it's kind of like stalling at this price. It's like the market makers just don't really want to provide liquidity at 16.5. You see, again? I mean, like, it's doing it very clearly now. We haven't seen it go across that price with more than 300 contracts. Yeah, it might stall until you're the very good observation, Peter. See, so for me, looking at this position down in here and seeing the way that it's been behaving at 16.5 makes me want to just scratch this. No. Are you guys messing with me? There's the E-mini, goes down again. I don't know, man. When I'm looking over the volume in ES, it looks like the futures are buying it, right? But so I think they're trying to dig their way out here, but it's just like not happening. Okay, so a little bit more traded 16.5 that time. Uptick. Good stack at 16.5. Doesn't hold. Stacks back, flips. Yep, flips. Downtick. Immediately, at least one person puked into 16. There you go. Clear 16. There you go. Interesting.
Block sell.
Holy shnikes. Okay, I am taking one contract off. What the fuck was that? Whoa. What the F? Dude. Dude, Jiwi, you got. That was like one of the most unlucky things I've ever seen. What was that? Okay, I'm gonna take the other one off. Whoa. I'm like, my heart is beating out of my chest right now. That scared the F out of me. Holy crap. I mean, it isn't my favorite. It looks like it could keep going. I don't know. Sometimes I would really want to press that. But that flow was so bizarre. I really don't think I want to mess with it. Like, I'm too afraid that it's gonna, right back. Whoa. Was that just, I mean, the dollar did spike there. What the crap was that? I have not seen something like that in a long time. I mean, like, that traded like news. But I really don't think that there was news hitting the market. I think that was endogenous. Because, and you know what was so curious about it? Did you see me kind of doing the play-by-play there? I mean, I was talking about it. It was like, okay, they upticked at 16.5. I wasn't happy about it. And then it almost immediately turned down. They were able to trade through 16, and I'm like, finally. Okay. And then down 4 ticks. Like, what? So I made 23 on that. Okay. Well, like for a day, that's good for me. I can't help but think that, like, watching these 3000s down in here now, I can't help but think that it's going to go further. And they are coming to those lows too. Like, this could be a stop run, my friends. Like, there could be a stop run at 12 and the E-mini is just getting creamed. It definitely looked like a stop run, but, well, I don't know. Like, was it just so I don't see news. I definitely don't see any kind of news whatsoever out there. I would also say that something like that on a options expiration Friday is incredibly unusual, right? Okay, Seth, let's rethink what you just did here. So you kind of saw the flow going, you wanted to go short, so you got in on that. You waited a little while, you kind of thought about getting out because you realized that there was a little bit of a liquidity hole where you'd gotten in, but you stuck with it. there was a flip around. It went and it gave you a big profit. My first thought was, okay, this could retrace. It hasn't retraced. But then my other thought is that I don't want to be in for the news at the top of the hour. So we've got, what, 10 minutes? Okay, so it doesn't make sense for me to try and get back in or try and chase this. Even though it may, as of yet, go before the news. Jeez. So a hole is when a small amount of orders or contracts does, well, it's not that it does not go through.
German.
It's just going back and forth across one price. Yes.
The highest since 2011.
Maybe the big boys have some insider info. Yeah. I'm not sure I can describe why I believe this, but I think it was endogenous. Like the way, because like it's stop runs, right? Okay, like when it's a stop run, like people are puking their positions because it hit a price or whatever. Like it doesn't happen all at once, It's like, okay, it ticks that price, one contract goes through, and then all of the stops hit. Maybe it ticks down, and then, it kind of cascades. It's like, oh, That one was just whoosh. That one was just somebody just hit the market with 10,000 contracts out of nowhere. Just bizarre freak. I can't explain. Right? So it could be somebody taking a new position and just being incredibly aggressive, but it could also be somebody not liking that it wasn't going back to, their mean reversion, whatever play and puking it. So I guess that's my justification as to why I believe that it was just endogenous and that streak of orders was not necessarily an indication of informed trading. So are you saying that you can recognize a hole without any DOM action? Well, so you will definitely see it on the chart. So if you go back to that spot on the chart, you can definitely see it, right? That's where we saw it, right? Right there at that price.
We get the University of Michigan.
It's just that by the time it's obvious to you on a chart, it might not be as useful anymore.
5.9.
Right.
1 year inflation prelim forecast 3.5%.
Like
on the prior 3.5.
You want to identify it when it's like right there.
Forecast 3% on the prior 3%. Condition prelim forecast 74.8 on the prior 75.7.
So I was saying that, like, okay, I took a trade, like, I think I took the trade on this bar right here, and then when I realized that it was in a liquidity hole, I kind of thought about exiting the position. Well, how can you do that? Because you'll just see it start to do that. It's just like we were moving, we're trending down, and then all of a sudden at that 17.5, there was like no liquidity, whether it was bid or offer. They were only putting up like 200 contracts. Is it scalpable? So I would not necessarily recommend trying to scalp those unless you can clearly see that it's across a range of prices. So when you're just like the one that we saw at 16.5 is kind of useless to you, because what it basically means is it's going to trade up and down at 16.5. So whether you want to go long or short, you can get filled at 16.5 very easily, but it will be very, very difficult to get filled short at 17 and very difficult to get filled long at 16. And if you do get filled in those spots, there's a possibility that it trades through you. So you don't necessarily want to be sitting on the edges of that. What you want to do is the opposite. Is you want to say, okay, like if I really think that something's going to happen, like I knew that market orders was going to come through, and so I want to get short, I would maybe hit in at 16.5 and take the position and be sitting with an offer at 17 in case I get lucky, right? Because if I can get filled at 17, there's still a really good chance that 16.5 clears. So I should be able to get an easy fill at 16.5, right? So if I can get the short there, then I can take it off at 16.5. And the whole thing is that if I'm positioned in the right direction, every once in a while I might get lucky and get the thing that just happened there. But that's also why I say that if I'm getting a trend and then I start to get signs of that liquidity hole, that's usually where I exit. Because it just goes back and forth there and does nothing. You're new to this, so you still think like a normal human being. If you keep staring at this particular abyss, you'll learn to think like we do. However, you'll no longer be in Kansas. It really does. You know what I've been thinking about lately is that most people approach the market like an equation to solve. Most retail traders, they think that it's this equation and there's some correct answer that is the pattern that it actually does, that if you do it, you make money. And just nobody's telling you what it is. And when you finally figure it out, then you get to join the club because, nobody will tell you what it is, but we're glad to have you join us when you figure it out, sort of a thing. That's the way that most retail traders approach trading, right?
Sentiment prelim forecast.
When you get into market microstructure, though,
with a range of
like
71 to
all of the illusions go away.
1 year inflation.
It's kind of like, well,
3.5%.
yeah, a lot of it is random.
3.5%.
Sometimes crazy things like what we just saw there do happen just endogenously, and it has absolutely nothing to do with the fundamentals. It really tears down this facade that we have built around the market. And even more than that, it destroys the mystery of it. Like, when you're coming in and you're looking at the equation, there's always this mystery of, why does it do this? Why does it do that? What is the solution? It seems like there's, like, I can get something here, but like there's some sort of advanced math that I have, and I just want to understand the deep mysteries of the market. And the reality is that actually there are deep mysteries about the market that you learn through the market microstructure. And once you learn those things, it's not nearly as interesting anymore. It's just kind of like, oh yeah, you trade it down because that's what the orders were. Maybe you have something that told you that those orders were going to come. If you don't, then just, oh well, wait until you do. Real trading skill is being good at backtesting? I don't know, man. I've backtested so many standard strategies, and I just never really found anything that really excited me to trade. It was nothing that was like, oh man, I cannot wait to put my live account on this thing. Never done it. maybe there are like critical points of strategy missing, but okay, well, now they're trading 12 half, so but we're like what, 3 minutes before the news? Well, I tell you what, if this University of Michigan number, so what are we expecting? Sentiment 69, 5-year inflation 3, 1-year inflation 3.5. Expectation 65, conditions 74. If that number comes out and I see the treasuries like crush down here into new lows, then I'm really going to be like, Because how many times since, let's say, the beginning of the summer, I think, have we had where there was extremely unusual behavior in the flow and trends going into the news that was like the number had been leaked or something like that? Like they knew what was going to happen. Or that they had somehow just have a really good estimate, you know? Because that has happened so many times. And yeah. I feel like Seth's videos don't go deep enough on the microstructure, at least for me. Well, so that's true, though. It is true. Because, number one, in those videos, I am very much trying to stick to what I can prove. So what can I prove? Here's the behavior that happens. And, you know, there's kind of like a main takeaway from that, you know, and that's what I'm trying to present in the video. There's two other parts. One part is, how do I try and use that? Right? Well, I can't prove to you that the way that I try and use those stylized behaviors are actually going to help you or not. I can't empirically prove that. All I can do is like take the leap of faith and trade it based off of that, right? That's kind of like where the rubber meets the road that isn't empirical, unfortunately. So I don't want to put those in YouTube videos because I want those videos to be very strictly the facts. Okay. I do have the strategy guide, and that's where I talk about those things. That's where I say, okay, because of this behavior, I do this. Because of this behavior, I do this.
10 seconds.
Here we go. Let's. Okay, it's the other way.
67.7 lower than the 69. 5-year inflation prelim 2.7%. 2.7% lower than the forecast.
Now it's games.
1-year inflation prelim 3.1%. 3.1%.
Well,
lower than
I can't explain any of that. Okay, so 1-year inflation expectations 3.1 versus 3.5, 5-year 2.7 versus 3. So those are both yeah, you buy treasuries off of those. I don't know how far it goes from here. We definitely, okay, we are in a position though where like because it traded through that whole area and was like a real reversal and everything. Oh man. There has got to be somebody. There is going to be a lot of somebody's out there bitter about the way that eventually played out. I'm gonna have to go and turn that one into a short because that entire sequence of events was just like what happened? That was so weird. And then the news coming in and going like the opposite way just makes it even more weird, right? But I'm sure glad that I just took the profits. There was, you know, I could have made maybe a few ticks more, but because where did I get out at? 328. No, 4315. Oh, I don't know what it actually gave me, but it said that it was 4328 at one point. No, wait, that doesn't make sense. What it lists for me as last ask makes no sense. It was like at 4.3 basically. So I did get a really good. Oh no, 428. I'm going the other way. I'm thinking things wrong. I got here and I got 4328. So I could have gotten 1, 2, 3, 4, 5. I could have gotten $10 more on it, but that's still pretty good exit.
Interested.
And back to low. That would be hilarious if it just went back to the lows of today. I think we can rule out the leak theory. I think so too. So that comes back to my primary theory, was that it was just an endogenous stop out. The guy that got stopped out has got to be so pissed, right?
105.
The guy that got stopped out has to be so pissed. You know what? So here's the other thing, is that it was like all at once. You know, it was literally like somebody just stepped in and said, okay, I'm gonna market sell 10,000 contracts. Yeah, I could totally see somebody hitting their margin, you know, and the broker just saying like, screw you, we're just taking you out of it, and you're gonna have to take the loss, right? Could be something like that. Because like, really, why would you execute it that way? Like, if you wanted to go short, or even if you had profits and you're trying to sell, like, you don't execute it like that. You get way better price breaking it up, especially in the situation that they were in, where you know, there was plenty of room within that range and everything to do something, and you were at a price at 16 that tends to have a lot of liquidity. Yeah, it just doesn't make sense. Okay, so anyways, I was saying there's a couple of things that are missing from the video. One is I can only give you like the empirical information and like the top line takeaways. So I can't give you necessarily like how I trade with it, but that is in the strategy guide that you can download from speculatorseth.com/strategy. The other thing that is not in the video is the math. So the intention is that you go and you read the studies that I cite, you read the book that I cite, and you study the math yourself. The truth is that, number one, I don't know if I'm that great with the math, and like I don't think that I could come and derive these equations for you on the fly. Sometimes I have them memorized, but I couldn't derive them. I don't necessarily understand all of the methods that they use to get this stuff. Number one. And number two is I don't think that anybody would watch it if I went and I made a video like deriving them for us, you know? Nobody would watch that, right? So that part you kind of have to do on your own. So that's why it's kind of like what I'm doing is I'm showing you where the door is. It's like, here's the door. Here's why it's so useful. You've got to walk through the door though. I wish that I could just hand everything that you need for like profitable trading on a silver platter. I really do, but fortunately that's not the field that we're in. It makes me want to like go into something else. Like I'm never going to stop trading, but I kind of wish that I made content about something else. Like I wish that I made content about something where I could just say like, look, Here's how you do it. Here's the things, and it would apply to everybody, and that would just be it. It was just the straight information, and so that I could give people what they want. But that's not trading, and I can't imagine what field I would go into if I was to go into something else to make content for it. In fact, the sorts of things, how to make a Japanese cheesecake. Okay, so you know what? I've tried making a Japanese cheesecake a few times, and each time that I've done it, I'm like, this is disgusting. Like, yeah, it does have that unique texture and everything, but this recipe doesn't taste good. Nuclear science, how to... Does this move? You know it. Well, we have a hole here. We have a hole, like the post meta order impact is basically, we're basically there. I'm not necessarily seeing like really big changes in delta going in through here. The issue that I see here is, okay, yeah, we did trade across that whole range and we're reaching new regular session highs, but we're still kind of in this options are just like causing volatility to contract and contract and contract on you. And I'm honestly like, we're getting fairly late into the session on a Friday. Like, for me, I don't think I'm going to take another trade. Like, I don't think I could have gotten more lucky than that trade, and I got out, and I'm running away like a bandit, right? Like, I'm done for the day. So I'm a little bit skeptical that like there's gonna be this huge order that's gonna pop out. Like, if it would have been different if those numbers had been bad. If those numbers had been bad and we were like reaching those lows, there could be people that because of the options and everything might start getting like pushed out of their positions. But because it's reverting, that's just like what's supposed to happen, right? Don't quit your... Yeah, I'm not going to. I love my day job. I tell you guys, because I've been through this, like, basically what I did, what happened to me was I wanted to make video games. That's what I went to school for. I went through the whole track to make video games. And two things kind of happened. Okay. One was that Zynga came and wanted interns, and what they wanted and what they were going to give you for being an intern were so ridiculous and stupid. I'm like, there is no way I'm ever going to work at a company like that just so that I can make effing Farmville. Are you kidding me? I very quickly realized that working in the video game industry is practically slave labor and just isn't a very good industry to work for. And so I gave up on that dream. I said, I can make video games in my own spare time. I can just keep playing video games. It doesn't need to be my day job. I can find other things in the computer industry that pay way better. And anything that I'm doing with computers will be fulfilling, right? The other thing that happened is we did like a senior project where we were making a game, and I didn't really like the way that went. They didn't, I had a good idea. It was actually an idea that somebody else made a game like that and did really well. But we picked some other idea that I didn't think was very good. And then the person that was like doing the things was like constantly changing everything. And we didn't finish it. And then when we talked afterwards about like, we're going to get together and we're going to finish it, this kid wanted to like, start a company and take out a loan, and because he had been involved, or he had a friend that had done like a startup before, so like he wanted to do it in a startup, and I'm just like, well, this game is not cool enough for me to go into debt for it, so hell no. So I gave up on making the video game thing, and the financial crisis happened, and all of a sudden I realized that the markets were so infinitely more interesting than video games. And so I shifted everything to maybe I can make the move over to finance. And so I went and I got a job in tech at a finance company. but when I was at the finance company, was never able to make that transition from the tech to trading. Part of it is because I was not in New York. If I had been in New York, maybe that more would have happened there. Part of it was that it was really demanding. It was just really demanding, and eventually I had gotten to the point where I wasn't up to snuff, I think, or I needed a break at the very least. I would totally go back and work there again, and actually they've tried to recruit me a few times, but the timing just never seems to work out. But then also, the position that I had, I knew too much. They didn't want a trader knowing that much about the back-end systems. So like that opportunity, basically that door closed to me, right? So I went out and I did other things. I just, when I left the bank, I got another job almost immediately, making like way more. And then more recently I got recruited, wasn't even really looking for it, at a new company, making way more, right? And it's like, you know what? This job is great. It's fun. It's interesting. It's things that I find interesting. I'm good at it. I know more about it than most people, apparently. And it pays really, really well. Why would I give that up and spend all day staring at a number, waiting for a particular setup to happen, and then having to sit through that and deal with all of the stress of being in the position all the time? And that's how I'm going to make my living, right? Like, I started thinking maybe I'll day trade for a living. If I day traded for like a bank, that would have been a different thing. But like as a retail trader, it's not a dream. Like if that's your dream, I would change your dream. That's your dream, I would change your dream. Because it's not that great. It's a great hobby though. It's a great hobby. Especially if you already have money, like you're already doing something that makes a lot of money. So you can put the real money into futures trading, and then, yeah, you can turn it into millions of dollars. It's a great wealth enhancer. It's not a very good wealth starter, though. I could never do this. Like, you say more words in the stream than I say in a week. It takes practice. I tell you that. I mean, I've been doing it for years. I'm also like, I'm ADHD, so
France Finance Minister Lemay.
It's really easy for me to just go on tangents and talk and talk and talk and talk.
And Francis Lemay says we should stick to...
I find a lot of things are great expectation versus reality situations, yeah. The reality of day trading is just not what people think it is it? The reality of day trading really sucks. And that's like the first thing that I have to, because my intention, you got to understand, like, why do I do this? Because I'm not making a ton on YouTube from this. I'm actually, I've saved for a long time. And I am able to like improve the setup and stuff. That's usually what it goes towards. But yeah, I'm not going to make a living from YouTube. Maybe if I had like 100 times the subscribers, then maybe I could make money from the YouTube and I could spend my whole day making content for you guys, which would be great. But you don't make that much, you're not making that much money from it. So why do I do it? Because honestly, like, it's a lot of effort, isn't it? Right?
Francis
Coming here and streaming every day for the same 12 people, because the number of people on the stream is not like steadily going up. It's just pretty much been the same the whole time I've ever been streaming, between 24 and 36 people a day, and 100 views overall in a day. So that's not going where I make the videos. It's a niche of enough of the thing that like the channel's probably never going to become like a huge channel. Like I am super niche in already, like day trading is a niche, and then what I'm telling you is even super niche because a lot of people in the day trading just don't understand it or don't believe it or whatever the deal is, right? And when I make a video, like I write a whole script, I have to record it, I have to edit it. Like each one of those videos is several hours worth of work. So why do I do it? Here's why I do it. The edge is the community. Do you understand? The edge is in the community. When I get one of you guys in here like Ostrats is brand new, it's going to be really hard at first because you've got to build up all of these things and this knowledge of the market. But he has the potential to become a great trader. I feel that most of the people that I see here in chat that I've known for years are better traders than myself. And you guys tell me things, whether it's just making notes about what I'm doing, like, oh, hey, Seth, like, you did just get into a position, but you know that there's news coming up, right? You know? Like, but that's incredibly useful. When I'm having trouble, I have this community resource to rely back on in terms of, you know, okay, where are some places where we can go to try and solve some of these problems, and you know, what is the newest research? So we're always on the edge. The things that I've learned about market microstructure came primarily from a book recommendation that somebody here in Discord gave me. The edge is the community. And then on top of that, there's, you know, all of the analysis and stuff that you guys have about the news and where you think interest rates are going and so forth that we discuss here every day, right? You have too many people trading the same signal. That's bad, right? The market will start to trade against you on that. But if you have a group of guys that's just a relatively small group of guys working really closely together, and you're not all doing the exact same thing, but you're sharing your resources, that's where you go from, like, you know, actually standing a chance. Because you realize that the people that we're trading against have literally thousands of people supporting them, right? Like when you go and you trade for Goldman, you know, you have that entire tech infrastructure that's thousands of people that help build and maintain that every day, that is supporting your trading. And you're just going to do it all with one person? The edge is the community, is the biggest edge. Like the overall, like what is the edge that you have that Seth has that other people don't? It's the community. And the cool thing about that is that any of you can come in and start contributing and take advantage of that community part, right? And then it comes down to what edge do we have that day? What piece of information do we have that day?
Lemaire says we have to ensure trade based on fair rules.
Now, today, I think that we just got lucky, but... have a boxing mat with... Are you talking about... Wait, no, who is Pat? I don't think I know who we're talking about. I tell you what, I think that one of the things for like that would help the channel and the stream a lot is working with other channels and with other traders and like collaborating. I honestly, like, I'm really careful about who I, you know, would support. There was one guy that, you know, he wanted to do like stuff, but like I looked at his website and he had testimonials that made performance claims on his website. That's a no-no. So I said, no, here's why. They're like, no, it's totally fine. I'm looking at that. You probably should remove that. And like one of the issues that I constantly run into is that there's guys out there that are trading. I don't know if they're making money or whatever, but like I've seen their content and I like Futures Trader 71's content. I don't watch oh my gosh, how come I can't even Matt? I don't watch Matt's streams, but I've watched a video or two from him, and he seems like I would love to sit and shoot the bull with him. But the problem that I always have is that like there will be like one thing, or you know, it's like I just don't like the way that Matt trades. He trades price action, and I think it's nonsense. You know, I think he's a great guy. I think his strategy is bullshit. You know, that's not a knock on him as a person. It's not. you know. John, totally. I like John. To me is like the Godfather. Like, I guess I could reach. I don't know what I would do with John. I feel like that John has so much content that, like, I don't know how you would add to that. But that's probably a good one. Yeah. with Futures Trader 71, and the other one is the other guy that I really like is Brannigan Barrett. But they're both like pushing these paid trader communities right now, and that I hate that. I hate all these, you know, pay for a Discord, because what we're doing is like we're providing a community that I think really does all of those things and has been very successful. The Discord is huge, but you got these people trying to provide essentially the same thing, and I don't think giving you it really your money's worth. Paying you have to pay for it, and you're not really getting your money's worth, and I hate that. So it's like no shade on Futures Trader 71 as a person, but it's just kind of like I don't know if because if I get involved, then I'm kind of like involved with that, and I don't want to be involved with that thing, you know? Part of it is, you know, like, so every once in a while, I will go on a big, like, there hasn't been a good community since Top Step Trader TV. So every once in a while that there will be like some big name bond trader, and we'll like do research about them and stuff like that. And I'll always think, okay, like what would happen if I had the opportunity to talk to a guy like that? I don't even know what I would ask him. If I had the opportunity to talk to Jean-Philippe Bouchot, that's maybe one that we should try and do an interview with, and I'm just dragging my feet maybe. There's lots of things that I would ask Jean-Philippe Bouchot. But a lot of these, like, these legends, I wouldn't even begin, I don't think I could even begin to know, like, what I would ask them. It's a mechanism to filter. Well, yes. That's true. Interview with the flipper. I'm not entirely sure what you're talking about. There's definitely something to you don't want your community to get too big, and you want the people that are the most serious, so you put a paywall up there, right? But I do not feel that that's why those communities are doing it. I think they're doing it because they need the income. Well, yeah, but there's an interview with him? Because I don't think I've seen that. But it is just to the point. I don't feel that like a Discord community can provide enough to you to justify paying $100 a month or whatever, $50 to $100 a month on it. That's my issue with it. So, like, I just don't want to be involved. And like the thing is that I feel like if I start, you know, if I got really involved with those people and now I'm like supporting those things, you know, I just don't think it would be a good look. I don't think that it would be like a good and beneficial thing for you guys, so I don't do it. One of the other things that I want to do, because there's a couple of guys like Iaheza and who's this other guy? I made a video response to one of his videos. But like he keeps trying to do day trading, and he's trying to do charts, and he's trying to do price action and all of these things. And And these are guys that have like real money to like go out and really try and make money with it and everything. And I think that it would be really beneficial to be like, look, you're going to come for 2 weeks and you will be on voice chat, and you'll just be on voice chat with me for the stream for 2 weeks or whatever. And I will show to you and explain to you like what I'm thinking and what I'm doing and how we try and use what we know about the flows to trade instead of your stupid charts and everything. And I think that if I was able to take a person like that, they would have I don't know if they would necessarily make money right away per se, but I think that they would feel a lot better about their trading, because some of these guys, it's really like, okay, we tried this thing, and like the end of the videos are kind of feel depressing because they like feel down on themselves almost, that like it doesn't work. You know what I mean? And I think that if you could show them like, here's what's really going on, right? Here's what's really going on, and you can really actually understand it. You might not always be able to make money from it, but at least after the fact, you can understand what happened. You feel a lot better about it when you're in that, scenario, right? I think that would be really beneficial to people to see how that transformation works and why there's so much value in just being an informed trader instead of trying to base all your trades off of a chart, So I would love to do something with one of those guys. If there was somebody that, already had a pretty big channel and was willing to just be, okay, I'll be here with you during the stream, and we'll talk back and forth so that I can try and explain to you what you're doing. And that would be really beneficial to you guys, like new people, as like watching the development of somebody new going through it also. Oh, it was Daniel. It was Daniel Inskeep was the one that I've been watching that like I always feel bad when I watch his videos, because I'm like, I feel like you would be so much happier with your trading if you just sat with me for 2 weeks and let me teach you everything that I know. Because the stuff that he's chasing after I think are nonsense. They're very skeptical of anything that you propose. Well, and that's the other thing is, I would hope, especially for these guys that have tried a bunch of things and failed, is, I have empirical evidence backing the stuff that we're talking about, right? How you make money from it, that's another step. But at least the stuff that I'm telling you about the market, that the things we're telling you about the market are true things. Whereas all of this stuff about like price action, that it tends to behave this way after price action, people think that they know it, but like if you actually go into the statistics, you realize that they don't know. They really don't have the empirical backing to justify their strategy. It's basically, the empirical backing is the same kind of empirical backing that you might use to support astrology. The problem with Discord channel type systems is more for exposure. It doesn't actually help you get better. Well, yeah, I think Discord is really good at like sharing information. I think that Discord is really good at helping you understand like what sentiment is, what people in the market are paying attention to, like what pieces of information might move the market more or less, because you can kind of see like what all the research analysts are saying and stuff like that. And I think that Discord is really good at building a community, not as much as the stream, but the Discord is basically like where we are when we're not streaming, right? But the way that Discord usually comes out is, okay, there's this pieces of information that we're going to give you every day, and we might even give you signals and stuff like that. And like, especially when you go into, I'm going to give you a signal, then that's working against you. Yeah. Or like development programs, I'm not so sure that like me coming in and saying, okay, you pay money and then we'll have like our private trader development program. I don't I don't think those are worth it. Here's why they're not worth it. Because it's about collaborating, right? Each of us have to be bringing something to the table that benefits the group, and we're collaborating together. And how can you collaborate like really effectively when there's this uneven plane of we're all paying to be in it and stuff? You get what I mean? All we can do is design a system that generates a positive expectancy around uncertainty. Yeah, if you can do that, I tell you, this is the challenge. Okay, create a NinjaTrader strategy, a strategy in NinjaTrader that when we run it over 5 years has positive profit, a Sharpe ratio over 0.5, and acceptable parameters on the drawdown. That we had enough money. Let's say no more than a $5,000 drawdown. Okay. Like if I had a strategy that was like, I would totally just trade it sim, or not sim. I would just trade it the robot. I just have the robot do it. If there was really a strategy, it was like that. But over that large of a data sample, it just doesn't. I've never found it. If it exists and there's one that you can do with just the kind of data that you can get through NinjaTrader, like just price data, I'm really skeptical that something like that still exists out there. If something like that exists, it's probably already been arbitraged out of the market. So, okay, so what do you mean by empirical evidence? So this word is my favorite word, empirical, okay? Empirical means that there is like physical evidence that other people can look at and investigate themselves. So, for instance, if I say that there's a law of gravity and there's laws about moment, like I can use Newton's equations and I can say, okay, I can use Newton's equation and the weight of this object and all of this other information to predict how long it will take for this object to get to a place. I guess the weight of it doesn't really matter, right? Unless we're talking about wind, okay? And I can use that to make predictions, right? And you can go and you can set up your own experiment and push things down a ramp or whatever and use those laws to predict how long it's going to take and test it a billion times and see that your results are the same as mine. So that's what makes it empirical, is it's evidence that other people can look at and verify. Okay? So when we say we have empirical evidence about the markets, what we're saying is here is a model. You can take that model and run it against any data set that you want, whether it's the S&P 500 or the treasuries or whatever the thing is, and see the results. And if you have a large enough data set, you will see these statistical properties, right? That's what I mean by empirical evidence. So when we talk about like there's a square root law of meta order impact, okay, that is like a well-proven law. If you have data that shows you the meta order, so basically says all of these lots were all part of this one meta order, okay, and you look at the impact that they have on average, it will follow a square root law every time. It's empirical. You can go and you can test it yourself, right? So in order to do that in trading, for a trading strategy, to say we have empirical evidence that this trading strategy works, what you basically need is you need to program it so that anybody can take that program and run it against their own data set, essentially. So that's why I say, like, if you have a NinjaTrader strategy that does that, and you need enough data, so it needs to be 5 years or more. But if you got a strategy that's 5 years or more and the Sharpe ratio is over 0.5, then I would be interested. I've never found it. Never found it. You have a robot that gets a 60% win rate on Euro USD. Well, that sounds interesting. We'd have to try it on 5 years of data to see, you know, there's always a drawdown, right? That's what kills you. But I've definitely seen some strategies that kind of show the market does some weird things. Like, the problem is just like it will go one way for like a few months and then it stops doing the thing or whatever the deal is, right? How can you see that See Me Trading Challenge dashboard? That's a good question. Yeah, there's always a drawdown because the problem that I found, so like the sort of thing that you're talking about, you say you have a 1-to-1 risk reward and you're getting 60% win rate. That means it's probably a scalping strategy, right? And a scalping strategy almost always has a fat tail. So it's a question of what does the tail look like? But from 2010 to today, that'd be good. And if you could send it to me, I promise I won't share it with anybody else. If you send me something like, because if you get something like that, you don't really want a lot of people to have it, right? So I think if I go to cmegroup.com/futures_challenge/dashboard and it will show you the dashboard. I don't know. I think I should be negative now, right? I think that the overnight move probably pushed my account negative. Yep, negative 9,000. That's so crazy that it was like slightly positive, like the whole time until today. So I've probably gone from like, 74th at one point to like the bottom of the pack. Well, 736 is actually better than half of the people, so okay. Oh man. But yeah, like the thing is I tell you what, I've backtested so many different things. Surely it's possible. Will it last forever? Who knows? Surely it's possible, but I'd think that it would have to be something really counterintuitive. Like I don't think there would be, something common. And I just don't feel like it's worth it to try and find them. I don't think that you're very likely to find them as a retail trader. Are you familiar with Meta? Yes, unfortunately. MetaTrader is the only platform that I trash on. I'm not a fan of MetaTrader 5. I think it's a trash platform. I think it's ugly. I don't think that it works very well. I don't think that the developers are really making quality software. I think that their store where they're selling you algorithms is exploitative. And, you mostly use it to trade FX, which is kind of a crapshoot anyways. And I'm not a fan of MetaTrader 5. But you're saying that it's on Euro USD. So it must be what you did was co-integration. Oh, okay. I have a co-integration indicator on here. In fact, I don't know if I include that one in. I don't think that I do, because there's some weird stuff in libraries and stuff that you got installed, so that's why I didn't include it. But I have a co-integration indicator. But it's like it gives you the p-value out. So I've never really tried using it. It was like, okay, so when the p-value on this thing is above a certain amount, then you enter the trade, or I didn't. I never built a strategy with it. Econometrics. Well, okay. So is it something like I calculate what the value of the euro should be, and then if the future is far enough away from that, I take the trade? Because I would really interested in any kind of because every time that I've tried to go into something, it's like with the treasuries especially, where I'm like, okay, what if I could use this instrument and this instrument and calculate what the 10-year should be? Like if I use what the 10-year futures are doing and the difference between it being a 7-year and the actual 10-year and all of this other information, And I could say, what should the interest rate over here be on the micro? And every time that I've done a calculation like that, the degree of accuracy that I actually have isn't high enough. Like the spread of the instrument is less than that, and so it doesn't make sense as a trade. So if I could do something like that on Euro USD, I'd be super interested to make it in NinjaTrader. My guys are talking. Let me turn on focus assist here. Well, now that I've been yapping for so long, it looks like there was a pretty decent pullback from those highs, but now they're just kind of like they seem to be evening out. Co-integration it with past performance. Well, maybe I need to do more so other question. What method were you using to calculate a co-integration? I co-integrated it with its past performance, not the future. So are you saying like I take last week and this week and see how co-integrated they are? That sounds interesting. I haven't tried something like that. And that on a currency would seem to make sense that like if there's a yeah, because essentially what you're doing is you're saying there are certain patterns that like people need to move money before the weekend or whatever the deal is. So if you can show that there's enough of a co-integration between the two of them that you can try and follow that pattern. I'll have to think about that. Maybe I'll do some experiments based off of that. It gives me some ideas. Because the code, like, what were you using? Because I was using, this was like Auckland Dickey or something like that. I don't remember the exact name of the method. It was Dickey something. I just remember it was Dickey. Yes, Dickey Fuller, that's it. Dickey Fuller. I was doing it with Dickey Fuller. That makes me so, because I've always thought, like, okay, there are certain things that the treasuries will do. Like on the last day of the month, it tends to buy. And our understanding is that has partly to do with that people are selling their equities and buying treasuries to keep their asset allocation correct. And part of it is that like dealers replenish their inventory at the beginning of the month. Okay, so like if that's true, like how do you show it statistically? And I was always like, I'm not 100% sure how they do this. Like I can just look at every last day of the month. What did it do on average? Is it up or down, right? But now you're saying like, is it co-integrated? Because when you say co-integrated, what you're saying is, this asset stays within a certain range of this asset. So if you're doing that and you're saying like you're doing it on a percentage basis and you're saying, okay, like this one is actually stays within this other one, that says, yeah, there's other stuff going on and there's noise and everything, but the larger dynamics from this week to this week are the same. I could do those kinds of statistical analyses and I would be able to detect predictive signals in anything, because then I could start to also do those sorts of analyses on the order flow itself, right? So I could say, okay, how is the cumulative delta from last week co-integrated with the cumulative delta from this week? That'd be interesting. I'm going to have to try that. Where's my pen? So many traders hold less than 1 hour and then only talk about fundamental drivers. Like, well, I don't feel like the things that I talk about that I would refer to them as fundamental drivers. But, you know, there's all sorts of drivers that could drive the order flow and give you like a really good, you know, predictor. That's only for an hour though, you know. But I also do kind of feel like there's kind of like this cost analysis that doesn't really make sense, right? Like, if your goal is to make as much money as possible, to give yourself the best chance to make as much money as possible, the best risk reward is to just put your money in an index fund, right? And the next best risk reward after that is to buy and hold single stocks. So, you know, if that's your goal, it doesn't really make sense to day trade, does it? And so I think that we have to admit that to some degree, day trading is because we enjoy it and we want to be involved in the markets. And so we're looking for signals that are on short time frames, not because they're going to make us the most money or anything like that, but because it fulfills our goals of being entertained and engaged in the market. You know? Try first derivative co-integration? Okay. Those are things that I know I should be able to, like, backtest. Well, not backtest, but, like, look up. I don't know why I said backtest there. Those are terms that I should be able to look up and find college courses about. And that's not just, like, looking for chart patterns and stuff, right? That's a little bit more sophisticated than what most retail traders are doing. So that gives me some hope that you would be able to find something, even though some of those hedges might be taken out of the market. So I missed Greg's comment all the way back up here, but the flipper is Paul Rotter. Not sure how real the story is and what he was supposedly doing at the time that cannot work unless you're in a trading pit, but just my thoughts. Yeah, but is there a I don't recall ever watching or listening to an interview with Paul Rotter. It's your... Oh, dude. 100%. If you send me something like that, I will not share anything about it. And not only that, but if I were to try and trade with it, I would work out and negotiate with you, you know, how much is it going to put in there, because you don't want to destroy the edge, right? But I'm kind of interested in if I can run it on treasuries and find something, use this to take it further and, you know, or maybe modify it in some way to make it work on treasuries, or find other instruments that have, you know, these kinds of what I call a predictive signal. Because the whole thing is that the more order flow there is, like the more liquidity there is in an instrument, the more likely you are to get those sorts of regular flows that can be predictive based on time of the month or a bunch of other things. Man, the S&P 500 is just getting creamed here. But again, the gravity is at 4,500. In fact, when were we last at 4,500? You know, coming into this morning, I didn't really realize that we were like 50 points above 4,500. Because it would have been a really good, easy call trade to just go short ES on the open, wouldn't it? Or go short as soon as we got in here, frankly, because it's been down the whole time. It would have been 50 points. That would have been a great trade. But yeah, if you want to show me something like that, just go to the Discord, and you know I'm there on the Discord, and you can just message me. It's highly susceptible to spread and slippage. That makes sense. That makes a lot of sense. In other words, it's a tight edge. There is competition. And the people that would be most competitive with it are the ones that have really good fast execution. But I'm interested because it seems to me like I'm now. It's so funny because like I've done stuff with co-integration and everything. I had never thought about doing the co-integration of a data series on itself. That like I don't even know if you really even have to send me anything. I just need to go and look at that now. I need to go and do a little bit of investigation with that now. If I go and I look at the treasury, I think that I would want to do a week and I would want to do a month. If I look at the treasury over the last, last month versus this month and look at their times when they're co-integrated, and those would be the times where I'd be looking for, hey, there's a flow there that I might be able to regularly take advantage of. Yeah, I'm pretty smart. Well, you do seem pretty smart, to be honest with you. I mean, you didn't explain what you were doing at all. But I could immediately see, based on the areas that you were doing things and stuff, that you were definitely somebody that's been looking at the flow a long time. I think that you have more balls than I do, because some of the spots that you decide to do it, I'm like, there's no way I would touch that one. And oh man, the loss today, that's. I mean, I've been on the same end of that one before, right? When was it? Like 3 weeks ago or something, I caught the wrong end of something like that. That was just really bad luck, I felt. But the what happened today was worse, man. That is. I'm gonna be thinking about that trade for a long time, because it just doesn't make any sense. Why would somebody just dump 10,000 contracts onto the market out of nowhere? It doesn't make sense. It's really weird. Unless, I mean, it'd have to be some sort of a stop run, or a broker taking somebody out of a position is kind of more likely, but that's, you could call that a stop run. It just doesn't make sense. And it makes even less sense, like, within context. So I'm going to be thinking about that one for a long, long time. You know, looking at this. So it was definitely, if I could have come in as soon as we started the stream and gone short ES and just held it, you'd be up, what, $35? Something like that. But, I don't know how much adverse excursion you would get. If I had done it like immediately when I got in here, it wouldn't really be any adverse excursion. See, it's been a long time since I've looked at the E-mini, where I looked at it and was like, I could have taken that trade. A lot of the time, I just feel like it's random. So many things didn't make sense today. Yeah, well, usually when you get a really big options expiration, things kind of start to get like pinned. And the market is definitely acting like it is being held back by the options. But at the same time, there seemed to be more of a attempt to push it out of the range than you normally would get, you know? So there was definitely a number of suspicious things happening today. And my conclusion, though, and here's what I feel like we get out of today, is that Monday it's going to do wild stuff on Monday, probably. And I suspect, by the way, now it just makes me want to trade MES again. I suspect that the play is short. Like, okay, so like if the call here is 4,500 today, if you had taken that trade, you're short 4,560. I think you hold it overnight in the hopes that they try and make another push even further south on Monday, because you've got the buyback window starts on Monday. You're gonna have all of this gammas coming out. It's a seasonally negative time period anyways. Yeah, I think you've got a really good shot at a short on ES. And if it doesn't work, then that's probably like the start of another rally that goes until the end of the year. What are you saying here? Strip is pinned. Yeah, pinned. Well, it's time for me to get going. I will try and make a video about what happened to us today, because that was like, what? What? So, how do we describe it? I don't even have to say options. Okay, options expiration. Bizarre 10K market sell out of nowhere. Lucky win from
Energy
bizarre 10K market sell out of nowhere. That's what I'm going to call it. That was such a weird trade. Okay. Yeah, I shouldn't think about it too hard, because next time I'm going to be in a position to be like, yeah, but what if 10,000 contracts just come out of nowhere and push me to a loss? You know, that would have been ugly, right? So, guys, I will see you on Monday. Have a good weekend. Stay